Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here's your host, Ian Wellham.
Hello, and welcome to the Accounting Success Podcast. With me on the call today is Tom Filomeno, President of Filomeno Company, a 10 CPA firm in West Hartford, Connecticut. Tom's father, Joseph Filomeno, founded the firm in 1966, and Tom has adopted his father's mantra, which is always to look ahead and make the firm better. Today, Tom spends considerable time serving clients, particularly in manufacturing and wealth management. He collaborates with manufacturing clients on their specialized issues, including inventory, job costing, overhead allocation, and financial analysis. He also consults regularly on wealth management, financial planning, tax planning, succession, and estate planning issues. Tom also serves as a trustee for many individual clients. He possesses considerable experience and expertise in the individual tax area and serves many clients in that capacity as well. Filomeno Company services a variety of industries, including construction and real estate, healthcare, manufacturing, professional service, retail, and technology. To stay current on industry issues, team members participate in a variety of industry-specific associations and attend industry-focused seminars and conferences. Tom doesn't consider himself an accountant. He considers himself a problem solver. Likewise, he doesn't consider his firm an accounting firm. He considered it to be a proactive advisory firm. As such, Filomeno Company offers an extensive list of services beyond traditional tax and compliance, including business advisory, business valuation, corporate tax, estate gift and trust, fraud prevention, individual income tax, and qualified plans, to name a few. Tom, welcome to the podcast. I appreciate you joining us this morning.
Thanks, Ian. It's great to be here.
Tom, I see your firm's celebrating your 50th anniversary. Congratulations on that. That's quite an achievement.
Yeah, it is awesome. It's a nice moment to reflect on.
I'm sure. Now, I know you weren't around during the beginning days of the firm, but I believe you did get involved at an early age, talking shop around the family dinner table.
Yeah, exactly. My dad started the firm in '66, and so I started. As you mentioned, I heard all the conversations around the dinner table as I was growing up, and then probably when I was in high school, I started coming in and helping with some of the, really just office administration kind of tasks. But then, as I got, more into my studies and my career and went on to college, I started to actually do client work and get involved in that. And it was really beneficial to me because it's like, many kids today, everyone does an internship today. That was my internship. My internship lasted for about 5 years. And I'd come in, I'd work on some stuff, then I'd go back to school. And often I'd have in class one of the topics of something I just worked on. So it was really helpful for me.
So what kinds of things did you do when you first started in the office?
Well, when I first started, I remember I was just telling someone this. One of my first jobs was back then. Of course, there was no internet, there were no computers, and so our tax service, where we got all our tax research, was manual. Paper service. It was 3-ring binder notebooks, and so to update those notebooks, the service we subscribed to sent us new pages, and we had to put those in the binders and take the old pages out. And of course, nobody wanted to do that, so I spent many afternoons after high school doing it because I'd walk in and there'd be a whole pile of them on the shelf there, and that's probably the most basic thing I started doing. But every once in a while, I'd read something in there and maybe learn something, and so that's what I started with. But then as time went on, I started doing more things like writing up trial balances and actually doing fixed asset schedules and amortization schedules, all things that are done by computers today that we had to do by hand back then.
Oh, yeah. I remember all that sort of thing, Tom. I really do. Now, when did it hit you that this was what you wanted to do for a career?
I sort of just always knew it. I knew I was always interested in the conversations that, I'd have with my dad at dinner and otherwise. And I was always interested in business. And it seemed like a a great profession. It was very professional. It was respected. And, my dad had such a commitment to client service and to the people, such a passion. I just sort of got that passion, and there was never really any other choice. So that's just what it was right from the beginning.
So how many years did you work alongside your dad?
Well, so I got out of college in '78 and worked with him right until probably let's see, he turned over the reins to me as president in '99, but he continued to work until probably about 2005 or six or so. So we worked with him for 30 years, pretty much.
Wow.
And we had, we're really fortunate. We had a great relationship. It was the kind of thing where, he was very, understanding of me and my position. He would encourage me. He would mentor me. I mean, even in college when I was in class, he'd come to my college and with my mother, and we'd go to Sunday lunch at a restaurant. And he'd make me bring my homework, go over my homework with him. But he was very helpful. He taught me why things were the way they were. He always gave me the background. He taught me how important it was to network in the community. He brought me to every organization he was involved in. I always was the youngest person in every meeting that I went to. I'm now, incidentally, probably the oldest person in every meeting I go to. But it was a great relationship. He really did everything he could to help me succeed in the business, and he was also very willing to change things if I had ideas, listen to my thoughts, and some he'd tell me why that wasn't a good idea, and others we would actually implement. So we had just a great relationship. I'm really fortunate.
And what would you say the best piece of advice your father gave you about being an accountant?
Really was that it's not about the numbers, it's about the people. That you have to, the numbers are the tool and the language and the methodology you use to solve the problems of the people, but it's all about the people. It's about being proactive with them. It's about calling them before they call you. It's about, finding ways that you can help them that they don't even know exist. And that really applies both to the clients and to the people here at the firm, just to keep your thoughts. It's easy for us as accountants to focus only on numbers. We're sort of wired that way, but I'm fortunate that he made me also see the people side of the business.
Well, I think that actually brings me to the next thing I was going to talk to you about. Is I see in your directory that you have a staff position called the Director of Culture. Is that something that came from your father, or did you invent that?
No, that's something that I added. It just occurs to me it's such an important part, and we're fortunate to have a really awesome person in that role. And so she's sort of the cheerleader. We all can, get bogged down with our workload. We can get caught up in the details of what we have to do and the stress of getting the tax returns done or the financial statement done or the tax planning done. And she makes sure that, we keep our eye on the real target, and that we, for example, I have a big project due today, right after this podcast. I have a meeting with a client, and but I walked into our Friday morning team meeting, and our Friday morning team meeting, the first thing we do in the team meeting is talk about all the wows that were received during the previous week. So, we have a program here where anyone can give anyone else a wow when they sort of catch them doing something right, and all of the wows sort of line up with our values. We have a whole list of values in the firm, and people sort of relate the wows to the values, and it just sort of breaks you out of that trance of being so focused on the client deliverable and the workload that you step back a minute and you realize the people are the important part, and it allows you to take a little deep breath and get refocused. So CAT is a really big part of that.
Well, I have to say, I think that's a fantastic thing to do. I think so many firms don't recognize that aspect. And as you say, pulling yourself out of the weeds, if you will, and get there and recognize some of the great things that are happening. I think it must be incredibly motivational.
Yeah, it really is good. And it's a great way to reinforce our values. One of our values, for example, is, we work as a team to get things done. There's no personal agendas. People jump in to help out. And there was a few wows this week about a few people in the firm that had stayed late because there were projects that needed to get done. And, they either stayed later, they went home and worked on it till 10 o'clock at night, or one of them logged in at 4 o'clock in the morning and got the work done. And so then you usually see at the end of it, hashtag teamwork, so people are connecting the event with the value, and that's really important.
I think something that's tied into maybe the philosophy of the firm is I saw where your firm was celebrating the 50th anniversary by performing 50 acts of kindness throughout the year. I thought this was really unique and a wonderful idea. Can you tell us a little bit about that?
Yeah, that's been a fantastic project. We finished our 50th act just recently, and now we have a few more that we're doing. We're doing a mitten and glove and scarf drive for Christmas holiday, as well as some food for a food pantry. So it's sort of a continual thing. It's the fact that we did 50 of them has sort of ingrained it into our culture. None of them are huge. We're not solving world peace or anything, but every one of them contributes in some way. The first one, it sort of started because we have a lot of office supplies here, and some of them we don't need anymore. We have a lot of 3-ring notebooks. We don't use those anymore. Everything's electronic today. And so they're, well, what do we do with all these? So I said, there's a little private school that's sort of struggling. I wonder if they could use them right in our town. So they called over there and they said, oh yeah, we would love to have these. So they brought over like 6 boxes of notebooks, and they were thrilled. We got pictures. The kids were out there bringing them in from the cars, and they got pictures with the principal and the kids and us bringing them. They're all simple little things. Another one, a couple of guys went over to Dunkin' Donuts and gave them $100 and said, do the next $100 worth of coffees are on us. Here's little stickers you can put on your coffee, mugs. So, we did a American Heart Association walk where the team went over there and walked, and people are involved in many different organizations, and so we would just jump in and help. So some have been outside the office and some have been in the office, but it's made us all, really think about serving the community, in that way. We're used to doing it for a professional basis in our clients, but serving as volunteers also is really important.
Well, I think it's fantastic, and I think I think 50 was a daunting number, and to have achieved it is frankly quite miraculous. Congratulations on that.
That's due to the director of culture being a chief cheerleader to make sure that it was always top of mind.
Yeah, well,
but the people, credit to all the people. I never heard one complaint. Oh, we're doing another thing. People were just wholeheartedly into it. So it was sort of heartwarming, actually, to see people's reaction to the whole thing.
Great. So looking back over time, Tom, how has the firm differed today from what you remember as a youngster growing up?
The single biggest change has to be technology. As I mentioned earlier, I did a lot of things when I started here by hand that computers do in seconds now. And, it's great because it allows us to spend more time on more meaningful advisory types of things. But it's also, I think it's harder for the younger people because they don't get such a grasp on the fundamentals that we got. I'm sure there's advantages to it for them. They're coming out of the box as thinkers more than doers, which is really great. So they're training and exercising those muscles. But the downside is that, we can spot errors faster. We can understand how to solve a problem faster, especially an accounting issue or something, a technical issue, because we have that really strong fundamental background of having done amortization schedules by hand and posted general ledgers and all that stuff that computers do just automatically.
Now, do you think that technology is an important piece to actually being a forward-looking firm and being less focused on just the compliance and tax returns, etc.?
Yeah, I think it's really important, and it allows us to do exactly that, to spend less time on the compliance piece of things and more time with the interactions with the clients. It also, I think, is more appealing to the younger people to work at a firm that's more technologically oriented. And it also allows us to keep the cost structure reasonable for the clients because obviously people want to make more and more money every year, but clients don't want to see their bills go up. So if we can squeeze a little more out of technology to keep the bills at a reasonable level and keep the people paid at the levels that they want and deserve, technology is a really good way to do that. We have a lot of manufacturing clients. Their customers are always squeezing them to be more efficient and actually lower their costs year to year and need a 2% reduction in fiber. I see this all the time when I go to my manufacturing clients. And I've taken a lot in our firm, a lot of those skills and ideas and concepts I've learned in those manufacturers and applied them to our firm. And some are even, you got to squeeze more efficiency out of technology so you can keep your fees at a reasonable level.
Now, you just mentioned about keeping, your fees commensurate with what the client is trying to do in terms of be efficient in their own business. Have you hourly bill, or have you gone to some fixed base or value-based billing?
Well, we're pretty much project-based billing now. Every client, every project that comes in, we evaluate what we think the billing amount will be. In many cases, it's already been communicated to the client. We have an arrangement letter. The price is all arranged ahead of time. But even if it's not, there always is sort of a general understanding anyways. If it's a recurring tax return, then people know what we charged them last year, so it's sort of our budget number. But we do everything really based on projects, and we have monthly targets of what our billing should be every month. And that billing, so that each of us as bill managers look at our list of projects for the month that all have dollars associated with them. We add up all the projects and make sure that the sum of mine plus all the other bill managers is enough to hit our firm goal for the month. So, that's a big change that we made also. It's another huge change from the days when my dad ran the firm till now, and that is, back then it was all billable hours. That's the only metric anybody ever talked about was billable hours. Now we don't talk about billable hours much at all. We talk about billings. How are your billings? And the idea is to get people to work together as a team to hit a billing target and have that be motivating and rewarding. Some of the rewards of doing this job are just hitting the goal and achieving a team-wide goal. And so that's sort of what we're after.
So thinking about your business owner clients, and it seems to me you're quite heavily involved with them. How often do you meet with business owner clients? So you have a regular meetings, obviously outside of any tax planning, but I'm talking about business advisory meetings and other things.
We do try to schedule one or two per year with clients, often with their families. All of our clients are pretty much family-owned businesses, and so we'll have at least one per year, just a regular family meeting. But the fact is we meet with them much more because things come up, and when things come up, that how that goes, it leads to something else. We either talk about one issue, but it leads to another one and another one. I got a lot of my manufacturing experience because one of our clients passed away and left me in charge of his will. I was a trustee of his trust, the executive of his estate, and the chairman of his $15 million aerospace manufacturing company. So I was the chairman of the board of the company for 2 years before we sold it. So I was going there every week meeting with those people. So that was I really got indoctrinated into how a manufacturer works. And that's where I really got the idea to do the project-based billing here and the project-based metrics here, because that's what they did. Every week they sat around and said, okay, here's our production schedule for a month. Here's what all our customers need. And they talked about where everything is. And they said, okay, when they figured out they could get it all done, they added all the project billings up of all the jobs that they had to do. And they said, okay, that's a little 50,000 short of our monthly goal. What else can we do this month? So I was sitting there going, well, why can't we do this in our firm? Why are we talking about billable hours? That's crazy. Billable hour is meaningless if you don't actually finish anything and deliver it to the client. So that was the impetus for me to change our sort of methodology over here and our focus over here.
Everything that you're saying resonates with me and what we do, but I think it's interesting that one of our approaches, and I think this is food for thought, is that the clients don't always know what their own problems are. Right. And so we've taken a proactive approach to basically discovering with the client what those problems are and meeting with them on a very regular basis, sort of a proactive problem finding, if you will, and taking action on that basis. We found that that's added a tremendous amount of value to the client. How do you feel about the sort of idea of proactively working with your business clients to help them discover what it is they need or want?
I think that's a great idea. I think the more communication you can have with a client, the better. The more genuine and sincere interest you can have in their business, the better. I say to people all the time that probably the best thing you can do for their client is have an unsolicited phone call to talk to them, so they know you're thinking of them. So you're taking it another step and having almost an unsolicited meeting. I mean, obviously you plan it ahead of time; it's not a surprise, but the more communication, the better.
Yes, absolutely. Now, in my intro, of course, I mentioned that you consider yourself first and foremost a problem solver, and that your firm's not an accounting firm, but an advisory one. That's a mind shift difference. Can you talk about that in terms of how you engage, for instance, with a new client who doesn't really know the firm very well?
Right.
And do you have a specific way to onboard them and deal with those initial meetings, which really set up the future?
Well, I can't say that we have a set process for it. It's sort of, we see where the needs are and where the opportunities are, and we just got a great new client. It's a very large client. We're going to do the tax work. It was being done by a much larger firm than us, but one of our partners had a great relationship with the primary owner of the business, and she wasn't happy with their service on the tax side of things. So she left the audit side of the work with them, but we have taken over the tax side from a firm that's 20 times larger than us, and boy, it's been a fantastic relationship. We are relating really well to them. They are really appreciating the service that we're giving to them, and some of that is because we're more hands-on. We have two partners and a senior manager working on the project for them, and some of it is, I'm sure that they're a big fish in our pond, and we give them fantastic service and attention. But they're also getting, and they've said it, the CFO has worked with, he's only worked at publicly held companies before this one, and he said, I've worked with a lot of larger firms, and there's really no difference in the talent level that you guys are providing than what I've had in the previous places. So we didn't have a specific methodology for how to attack that, but we really are helping him because since he's only worked in Fortune 500 companies, he's not really that familiar with S corporations and how family-owned businesses operate in a separate real estate entity. So we really can provide him a lot of insight with him, and we've had really terrific meetings with them.
So thinking about how the firm generates revenues, and if it's not being too nosy, what proportion of firm revenue today comes from the sort of consulting advisory services versus the backward-looking sort of compliance services?
Yeah, I'm guessing it's still probably much heavier on the compliance side. It's probably 70-30-ish. I guess I haven't looked at the numbers recently, but I'm guessing that's where it's at.
And do you have a goal to move that in a certain, to more towards the advisory services? Do you have a sort of a plan in place to get you to 50-50 and then beyond?
We haven't specifically addressed that. I think it's probably an important thing to do. We're members of the RSM Alliance. That's exactly what their goal is. They call it the 50-50 goal. They get to 50% advisory and 50% compliance. So I think that is important, especially with the advancement of technology. Technology is a huge help to us now, and probably in 10 or 15 years, it's going to be a huge competitor to us. So I think that makes it really
I suspect important. The timeline might be a little less than that.
Yeah. Could be.
Beautiful. But perhaps I might just talk a little bit about advisory services for a moment. With your business clients, which services have you found to be most popular?
Well, it's obviously the tax planning is a big part of what we do, and the succession planning and the estate planning for the owners. We consider all those advisory type services, and those are sort of our bread and butter that we do all the time. We also have partnered with some consultants that we've worked with that have helped us to get our firm to the cultural level that it's at. And we formed a joint venture with them called Ignition Business Coaches, and that really focuses on the human side of the business. It focuses on, are your people all aligned with the same goals and objectives, and are they helping you achieve what you want as an organization? And that really distinguishes us from other firms, because when we look and see the client's gross margin is a little low, a typical accounting firm might say to them, well, you have to reduce your costs and you have to raise your selling prices of things, and we would say, are you getting enough productivity out of the people? Are the people all on board? Are they doing everything they can to help your company succeed? Let's get under the hood and let's do some workforce engagement surveys. Let's do some behavioral analysis on the people. Let's do some interviews with the people. Let's do some training of the people so they understand what the goals and objectives of the organization are. So we've started doing that with our consultants, and it's a whole different level of consulting than most other accounting firms.
No, that's definitely 21st century advisory. I mean, that's certainly way beyond what a typical small, medium-sized CPA firm would do.
It's really because we've had this great relationship with this consulting firm, and it's helped us so much when we see how it can help others at other organizations as well.
Now, I think you've said already that you work with the clients, but it tends to be that they raise their hand in terms of what kind of advisory assistance they need.
Right.
But given that every client has a different situation, do you find that the more involved with the client, the easier it is to you to be proactive with the client and identify additional things you can do with them?
Yeah, absolutely. Absolutely. I say to people all the time, you don't sell work, you just solve problems. When you solve problems, then that generally leads to more work for us. Maybe it does, maybe it doesn't. That's not the point. You want to solve the problem, but often it will lead to additional work for us. So, and that only happens when you're with them a lot. So, absolutely.
Now, obviously, your firm's evolved substantially from when your dad started it 50 years ago. And you've had clients probably with the firm that have been there from day one, years and decades even. So how do you go about re-educating those clients about the new and improved firm when they kind of started off back in the day with, the traditional services?
Yeah, that's a challenge. You have to, show that the good part is we think we know our clients pretty well, and we know which ones might be open to more, to a different kind of relationship or expanding a relationship versus others. We clearly have some clients that, just want us to get their tax return done, their financial statements, get it to the bank, and be done with it. But we have others that we know are interested in improving their business, and so when we're out there talking about their tax return, talking about their financial statements, we may in the financial statements see some issues and start raising some points and questions and sort of steer the dialogue and see where it goes. So it's, again, a pretty informal way to do it, but it just comes through conversation with the clients.
So let's talk about new clients for a moment. What do you look for in a client? Who's an ideal client to you? When they come along, however they come to you, how do you assess whether this is going to be a good fit?
It's a good fit if it's a relatively successful business. It's a nice sized business. We like if it's a manufacturer, we like a $10 million manufacturer, and up is a really excellent client for us. There's a lot of services we can offer to them, but it also has to have, proactive management. I was with a client the other day that we were meeting. He's a manufacturing client. We were having a meeting about some other issues, and it became known to him that one of his checks got lost in the mail that he sent to one of his vendors. And it was from October. His vendor called up and said, "What's going on? You always pay on time. Where's this check?" And So he looked into it and found out it got lost in the mail. So he told his controller to immediately issue a new check, and he said to the controller, and by the way, when we always take a discount when we pay these bills, so he took a discount of $1,400 on this particular one. He didn't get his money, so cut him another check for $1,400 as well. Like, wow, this is the kind of guy we want to do business with. This guy is just has so much integrity, and is it's so important to him to honor his word. So he's like an ideal client. He's full of integrity. He's got a really nice business. He's open to suggestions, and we have a really great working relationship with him.
And how do these ideal clients find you then?
That one found me because I spoke at as you mentioned in my intro. We are involved in some industry groups, and so I'm on the board of the Connecticut Tooling and Machining Association. They asked us to do a presentation on succession planning for businesses. We did. He was there at our round table, and started asking questions. Asked me to go out and see him, and so we hit it off. And he switched to our firm. But he wouldn't switch to our firm until his CPA passed away. He was an older gentleman. He was starting to get sick, and he said, you know what, I'm loyal to this guy. He's been our guy forever, so I'm not switching because I have to be loyal to him. He was my dad's guy. He's going to be my guy until he can't do it anymore. So he actually paid us to redo what the other guy did, just to have another set of eyes on it. And then after the guy passed. So I found him by just being out there in the world.
And as a general point about marketing your services to potential clients, how do you do that aside from the being in the community, and I think you said speaking to industry groups, etc. What else do you do?
We also have a call service. I got a call one day that from someone who's just a marketing call, and normally when you get those calls, like everyone else, you just delete them. You don't pay much attention to it. But there was something about this call that intrigued me. It sounded kind of interesting. So we have a group in our firm. We call it Impact Marketing and Impact Growth. Actually, they do both. And so I passed this voicemail along to them. They interviewed the group. They liked them. They hired them. So this company makes a bunch of phone calls for us every month and gets us leads. I just heard in our team meeting this morning we have 6 leads for next week that we're going to follow up on for potential clients.
Do you have a specific process to follow up on? Designated people? Is there a specialist in your firm whose kind of like job it is to follow up with the leads?
Yeah, it depends on. It really depends on what industry it's in. If it's a manufacturing client, a certain person will. If it's an audit client, we need to have an audit person involved. So we don't have I can't say it'd be nice if we did. We don't have a designated process. Okay, here we go. Take the ball and run with this, guys. It's really more about lining up the person with the type of business that it is to initiate the call, and then they will start the process. We have a standardized proposal process. That all. The sort of back end part of it is all pretty standardized, but the front end is really based on whichever partner goes out there.
And do you ever turn down a client?
Yes, we have. If we feel that the either the mix isn't right for some reason, it might be that the client's not the right size for us, too big or too small. It might be that there's questionable practices. I mean, I had a guy tell me one time in the proposal that he wants to live right on the edge of fraud. He says, I want to be so aggressive that I'm right on the edge of fraud. And I'm like, well, I'm all for being aggressive. If you want to be aggressive, that's okay, but I'm not going close to the edge of fraud. No. And after the meeting, that was just one of the comments that he made during the meeting that made me feel that this is not a right relationship for us.
So, you mentioned them along the way, too small, which I understand, too big. What was your sort of parameter for a client being too big?
Well, certainly if it was a publicly traded company, which we do run into once in a while, or if it's a client that just is beyond our scope in terms of either the resources it's going to need or the technology or the technical skills it's going to need. Although what we would do in that case, we wouldn't really turn it down, is because of our affiliation with RSM, and we've done this a few times, is we've contacted RSM and we said, okay, do you want to go in this job together? And then then sometimes we'll be the lead on the proposal and they'll be the assist people, like they were in this large client we just got. We told them we have this affiliation with RSM. So it gives the client comfort that we have, besides our own technical ability, a whole world of resources behind us. And then in other cases, and we've done this too, we let them go in first, and we would assist them on the job.
I think as we've discussed and underlying this whole conversation is that as your firm changes and the whole CPA world changes, I imagine your employees particularly have to have a little bit more of an entrepreneurial mindset. How do you find employees with the appropriate mindset?
Yeah, I think, that's not easy. But although I think the young people have more of a bent for that, what's interesting to me is they come in here and we ask them to do some, basic accounting work, basic even bookkeeping work, get the client's QuickBooks in and go through it and make sure, and they don't enjoy that at all. They don't, so the kids today really they've sort of seen the big world, and they don't want to be, pigeonholed back down into a controlled or regimented bookkeeping kind of world. So the kids, I think, already are coming out of college with that mindset. So that's okay. But the problem is they need the skill set to go with it as well. And that's what we tell them. You need to experience a little bit of everything to get that skill set. The older people, that's more of a transition, That's where we have to say to the people, the issuance of the financial statement, the completion is not the end of the job. That's like the start of the job. Okay. In the old days, that's what it was all about, getting the financial statement right and accurate and looking nice and all that. That was the end product. Today, that's our mantra. That's not the end product. That's just a start. Now you got to tell a client, what does it say? Where are the opportunities? What made it different than last year? How's it compared to industry? We benchmark it. So that, sort of with the people who have been around a little longer, they're not quite as used to it. I find the young people are very much excited about that part of it.
Yeah, I think you hit upon a great point there, that the expansive mind of the millennials and
Right.
the way that they've been educated has huge benefits. But understanding that you need foundations to understand financial statements and how they're pulled together and how management accounts and what's important, how to analyze those things. Well, not terribly interesting from a pure, okay, I can make a difference. It's almost that you can't make a difference without understanding that.
Yeah, that's right, exactly.
So whilst I also have some questions I ask all my guests, and I hope you don't mind, as we come to the end of the year, what's the one thing you wish your firm did better and you're hoping to improve on for 2017?
Well, I guess we could always land more new clients. We had some good at bats, but a few of them we lost to larger firms. We did get that one that really was awesome, but a few of them. So I guess that would be a little better, and I guess if we could spend even more time on training, we spend a lot of time on training in the firm, but that's our mantra around here is all about the 3 Ds: develop, deliver, and delight. Develop the people, deliver products and projects to clients, and delight the clients. And that first one is really the most important. It's what everybody wants to grow and develop in their job. So I guess 2 things. So one would be develop even more new business on a regular basis, and 2, spend even more and better quality time training people.
Is there a big challenge that you see facing at the moment?
I think, I guess it's on a couple fronts. One is standing out and being noticed. I mean, there's a lot of accounting firms right where we are here in our marketplace, and it's a sort of a shrinking business market. A lot of businesses are not growing the way they were. There's not a lot of new businesses coming into town. So standing out when you're a small firm amongst all the large players is always a challenge for us. I think that's just something that we have to keep top of mind. And I think sort of managing technology is a big, and change is a big challenge. Everything changes in our profession regularly. So And I also think that staffing is a challenge, for a couple of reasons. One is that people move around much more frequently than they did before, which is good and bad. And also there's like not a lot of mid-level people that want to work in public accounting firms, certainly of our size. They get a few years or maybe 5 years experience and they move into private, or a lot of people use public accounting as springboards to other jobs. So a lot of those mid-range people aren't around. So I guess it's really on three fronts. It's continuing to develop new business. It's managing technology, and it's also having the right people, being able to recruit the right people in our firm and keep them here.
Yeah. Tom, when I first became a chartered accountant, which is a little longer ago than I care to remember, the industry, even though I was in a big four firm, the industry was a little bit slow and sleepy. And today the pace of change is accelerating, and the demands on our time, frankly, enormous. How do you manage your time so the most important stuff gets done?
Yeah, that's really a challenge. That is really a challenge. We just communicate regularly here in the firm. I spoke with one of our senior managers the other day on a client, and I said, this client is sort of begging for more help, and you can provide it. You have the answers to what this client needs. We have the answers, and you have to, why aren't you stepping up here? And he goes, well, I don't have the time. I don't know where I would find the time to do it. I go, we have to find the time for this client because this client will appreciate it. And this will make a big difference in our relationship with this client. And if you need help with the other stuff, just come to me and we're going to have to offload it. I'll do it. I'll get someone else to do it. I'll find another resource that will get it done. So, it's just identifying where the big rocks are and making sure you do the big rocks first, and that you reshuffle things with the resources we have to get to the other ones.
Yeah, yes. I mean, when we talked to believe the industry's changed more in the last 5 years than it did in the previous 50. And as you sort of survey that changing landscape, where do you see the big opportunity?
That's a great question. I still think it's in consulting with the clients because they need more help than ever, because if life is changing for us, it's changing for them as well. And many of them are, not as equipped to handle all of that. So there's so much to know. There's so much they have to know. There's so much we have to know that, if we can take as much responsibility off of their plates, they can then focus on the business aspect of their professions.
Yeah.
So I think it's being their right-hand people, their trusted advisors.
Yes. If you could go back 20 years and give yourself one piece of advice, what might it be?
I guess it would be to pick your head up from the desk and be thinking about that all the time. I talked to someone yesterday. We were at a client that it's really, everything is going really well there. So now all our conversations with that client are about, well, if you sell the company someday, would be important to a buyer. Like having accurate monthly financial statements is important to a buyer. You know your business inside and out. You know it's fine. You could run it even without it. He doesn't even run monthly financial statements because he knows the business. He uses other metrics and discussions with people to know his business is fine and is healthy and he's doing very well. But we said to him, if you're going to sell this someday, here's the things you need to have in place. So now the conversation with him is all about running his business like he's going to sell it someday. And that really, I read a book by Michael Gerber many years ago called The E-Myth Revisited. He said that's the reason you start a business is to sell it. And if you think of that from day one, you'll do things differently than you would if you didn't think that way. You wouldn't have your head so buried in the details. You'd be sort of thinking about the bigger picture. What do I need to do so this place is totally saleable and we can maximize its value someday in the future?
Well, that's very, very, very interesting you say that, Tom, because if you think about it, wherever we want to do something, we think about where we want to go and then we plan how to get there. And yet, in business, often we don't do that.
Yeah, exactly.
Kind of, it's kind of as you say, it's your head's down and you're running fast, and at the end of the day, you're probably missing some of the things that you should do.
Yeah.
And I think that's one of the things that you can add to your clients is to kind of make them recognize that, help them recognize that, And then they will be in a better place, whether it's succession or it's a sale, or even if they're really successful, it's a public offer. They could get there faster and in the best shape possible.
Yep.
Well, unfortunately, the clock's telling me that our time's just about up. So, is there anything that you'd like me to add or that I didn't ask you? Anything you'd like to tell us?
No, I think we've really covered it all. I think that there's a lot of challenges. I agree completely. The pace of change is accelerating, and our rules are going to continue to change, and we have to keep our eye on the ball and make sure that we move appropriately with it. Don't get hung up doing things the way we always did or even what we always did.
Well, I'd like to thank Tom Filomeno, President of Filomeno Company, for being so generous with his time today. Thank you, Tom.
Okay, thank you, Ian.
Now, if people want to learn more about you or Filomeno Company, what's the best way for them to do so?
Well, you can go to our website at www.filomeno.com or shoot me an email at TJF, as in Thomas J. Filomeno, at filomeno.com.
Could you just repeat the website name again, please, Tom?
Yes, it's www.filomeno.com, FILOMENO.com.
Excellent, thank you. Okay, there you have it. This is Ian Wellham saying goodbye for now. Thanks for listening. We'll see you next time on the Accounting Success Podcast.